It's the exact same model. And, in my view, Bitcoin is going to do for money what the internet did for communication and information sharing. Someday, my average cost is going to seem incredibly cheap to somebody who's paying $2 million a coin. So it's just, it's Sailor's point. I mean, it's going up forever, Laura. Everybody's going to buy this eventually. I don't think anyone realizes, or I don't think a lot of people realize that. So you might as well buy it now versus waiting and having to pay a lot more for it in the future. And then, of course, the financial crisis hit, the 2008 financial, and we could see the buildup to that. I saw the buildup to that. And the response to the financial crisis radicalized me for sound money. I mean, I'd always been a sound money guy. I'd always owned gold and silver, and I'd read all the Austrian economists, and I understood, the crime that going off of the gold standard was in 1971, and I recognized that we had a shaky fiat system. But, I figured investing in technology companies that were growing was about as honest a living as you could get in a shaky fiat system. And so that's why I was a venture capital guy. When I realized the venture capital thing, that's the other thing I realized about the venture capital business. It was very corrupt. I mean, there was a lot of bad stuff going on, which we tried to avoid, but has only gotten worse since then. And so in any case, I got out of it. I was managing my own money, coaching my kids' teams, and the GFC happened, and I went, oh, shit. I've got a pile of money here. I'm in my 50s, and this isn't going to last.
Larry Lepard is a seasoned gold investor, venture capitalist, and ardent proponent of sound money. Throughout his career, he has dedicated himself to venture capital, particularly in the technology sector. He was actively involved in the dotcom era, when the internet was just beginning to take shape in 1993 and 1994. Despite his significant experience and success, the financial crisis of 2008 marked a turning point for Larry. It was then that he discovered gold, and later bought Bitcoin in 2013 when it was valued at just $300. Reflecting on his investment journey, Larry often speaks about the significant opportunities he missed with Amazon and Google. He regrets not recognizing their potential early on and believes that many others will experience similar regret if they overlook Bitcoin now. Larry's insights serve as a powerful reminder of the importance of recognizing and seizing transformative investment opportunities before it's too late. Make sure to watch the video until the end, as Larry shares his highly insightful and powerful predictions for 2024 to 2025. As we bring you clips from the interview, take a moment to like the video, subscribe to the channel, and turn on post notifications for more video like this. You can join the conversation by dropping your thoughts, comments, and observations in the comments section below. Everything you do helps with YouTube algorithm and immensely contributes to the channel growth. Thank you, and enjoy the video.
I'm going to live for another 40 years, and they're going to inflate the value of this away. I've got to figure out a way to protect myself. And so I thought, I went back and I studied, okay, well, inflation, high inflation. Well, there was one period of time when we had incredibly high inflation. It was the 1970s. When we did go off the gold standard, it triggered that first bout of inflation, which Paul Volcker slayed. But I looked at the 70s, and what you realize in that time frame is when we had high inflation, the best area to invest in was gold and silver and oil. Gold stocks, silver stocks, oil stocks, they all compounded at 30+% a year for 10 years. And gold went from, $35, an artificially depressed reference price of $35 an ounce, which came out of Bretton Woods, to $800. And so I decided I was going to pivot and invest in those kinds of stocks and companies. And I was actually quite convinced, wrongly so, that QE was going to lead to massive inflation. QE was going to lead to, the debasement of the currency. And it was under the surface, but not in the traditional sense. What I didn't see is the way that they were going to sterilize it from goods prices and other things, and all that extra QE was going to get shoved into asset prices and start to create the next bubble, which is the one we're in right now, called the everything bubble. And also during that time frame, I had my eyes out, and I was watching all the other forms of sound money, and Bitcoin came along, and I heard about it from all the Ron Paul guys. I was heavily involved in his campaign, ran a couple of national newspaper ads for him in the 2008 cycle, and these people were saying, hey, this Bitcoin thing is real, you got to look at it. And I have to say, I was a skeptic primarily because I'd looked at the prior ones. eCash, and there had been 5 or 6 Bitcoin predecessors, all of which failed. because they didn't have all of the pieces of the puzzle, you know. And so as those predecessors had failed and Bitcoin came along, I was like, yeah, here's another form of, you know, cryptocurrency. Here's another form of internet-based money. But, you know, I know how this ends. We're going to have a double spend problem. We're going to, you know, we're not going to have true scarcity. And so I was skeptical. I saw it go from 20 cents to $1, and then I saw it go from $1 to $1,000 and back to $300. And then, you know, Coinbase came public. And, you know, you could see the technology just getting better and better in all of the pieces that made the internet work. And so
The dot-com era, also known as the dot-com bubble, was a period in the late 1990s marked by a rapid surge in the stock prices of internet-based companies. This time saw unprecedented growth in the technology and internet sectors, driven by speculative investments and the widespread adoption of the internet. Venture capitalists played a crucial role in fueling this boom, pouring large sums of money into emerging internet startups. While many companies flourished and transformed the digital landscape, others crashed spectacularly when the bubble burst. The internet transitioned from a military and academic tool to a commercial platform accessible to the general public. The development of the World Wide Web and web browsers like Netscape Navigator made the internet user-friendly, sparking interest from both consumers and businesses. This boom reached millions of users globally, mirroring Larry's discussion about the potential for Bitcoin as it gains more widespread global adoption. Now, let's return to more clips from the video.
You know, Krugman was saying it was no better than a fax machine, and I was saying, bullshit, this is a lot better than a fax machine, and the entire world's going to want it and use it. And I remember it was hard to use, and I remember, you know, setting up my, you know, at the time, probably 70-year-old mother on her internet account. She had a hard, you know, she couldn't have done it on her own, but, excuse me, then AOL came along, and that made it a lot easier for a lot of people. And, you know, broadband came along, that made it a lot easier for a lot of people. So you could see all of that. So, you know, all of the, and you could see that there were problems, but you could also see that technology was going to address them. And I think the same is true of Bitcoin today. You know, there are problems. The layer 2 is still clunky. Not everyone knows how to send a Lightning transaction. You know, self-custody is clunky and hard to do. You know, there's a lot of fraud. There are a lot of people getting ripped off. I mean, all of these problems are very big and very real, but they will all get solved because that's what people and entrepreneurs do. And so, you know, there will be continual breakthroughs, just like in the internet. You know, when we went from green screen to, you know, Windows, that was an enormous breakthrough, you know, and then we went from dial-up to broadband. That was another enormous breakthrough. And now here we are, you know, 20, 30, 40 years later, and I'm talking to you halfway around the world real time. I mean, as recently as 10 or 15 years ago, you had to buy very expensive equipment to do video conferencing, and even then the quality sucked. It's the exact same model. And, you know, in my view, Bitcoin is going to do for money what the internet did for communication and information sharing. Seeing the same thing going on in Bitcoin, by the way, right? I mean, there's just enormous, you know, adoption and growth and increased users, and ETFs are bringing all that. Let me tell you about a couple that I missed, all right? So Amazon comes along and Google comes along. And when I started my own fund, the first thing I did was, okay, I'm going to start looking for growth at a reasonable price. And I found it in India. We were doing cell phone providers that were growing 40% a year and trading at 3 times earnings. So that worked. Okay. But I was looking in the US as well. And I saw that Amazon was growing. And I also saw that, you know, that Google was growing. But in both cases, particularly in the Amazon case, they weren't making any money. And so I was putting my old finance lens on it and saying, well, yeah, it's growing, but they're growing revenues, but they're making it up and losing money and making it up in volume. And they were able to do it because of ZIRP. Okay. You know, in other words, their cost of capital was incredibly low. I mean, Jeff Bezos basically destroyed middle and Main Street American retailers because he had no cost of capital. And so he could, you know, and he went around buying, you know, he paid tons of money for warehouses and warehouse picking and all that. He could foresee where we were going, and he didn't have any cost of capital. It was stunning. But he wasn't making any money. And what I didn't realize is he was running the old monopolist play, which is to lose all the money until you've got a monopoly, and then you can increase your prices and make a ton of money. And so I didn't realize that was the game he was playing. And so I thought it was a flawed strategy, and so I didn't invest in it. And I deeply regret that. The one with Google was similar, but they weren't doing it so much on free capital. What I couldn't understand about Google was I used Google, but I never clicked through on the ads. But I thought to myself, how does this, this doesn't make sense. I mean, these ad people are getting duped. I mean, they're paying a ton of money to put ad on Google and to get placements on Google, but it's not working. Now, I was wrong about that, but because of that, I couldn't see it. But they were both very similar kind of network businesses that got more valuable as more users joined, okay? So I'm not going to make the mistake, a third time. So when I saw Bitcoin and I realized what it was a network of money, and it was growing, steadily and exponentially, and that everyone needs money, and that it is, truly the best form of sound money. I mean, as Saylor and Preston have said recently, there's no deflection in it. There's just 21 million of them, and that's it. It's just, to me, it's such an obvious, clear bet. And, you said price predictions. I mean, I have no idea where it's going tomorrow, or I don't know where it's going to be at the end of the year, although I mean, I'm guessing maybe 100K or something, but, I'm absolutely certain this is going to be 200K, and then someday it's going to be 1 million, someday it's going to be 2 million, someday it's going to be 8 million per coin. I'm talking that because that's just the natural progression of, the growth of a network. And so, that's why I'm pounding the table just to, and people getting into it, they think, well, I'm paying too much. I mean, I have a friend who's very, very wealthy, and, he knows my average cost is quite low, and, you just can't bear to pay 60 or 70 grand. I said, look, it doesn't matter. I mean, I paid, I don't know, whatever I paid, I mean, in the thousands for probably as an average. But, Max Kaiser was paying $2, and I don't regret Max. I mean, I just recognize that, someday my average cost is going to seem incredibly cheap to somebody who's paying $2 million a coin. So it's just, it's Saylor's point. I mean, it's going up forever, Laura. Eventually, people don't realize that. Everybody's going to buy this eventually. I don't think anyone realizes, or I don't think a lot of people realize that. So you might as well buy it now versus waiting and having to pay a lot more for it in the future. The ETFs are an enormous positive development. They really are. They give a lot of money access to the asset, and even today, I mean, the assets, I mean, I think it was down to 60, high 50s, 60. Look, it's still up, I don't know, 40% for the year. I mean, it's not like it's it's not like a disaster. I mean, a year ago this was 30, and half a year before that it was 16. So, it's still kind of working, and it's going to continue to work. And so, I think the short-term swings aren't that relevant. I mean, I don't know why the price is where it is today. I don't really watch that sort of stuff that much. I mean, certainly the Mt. Gox coins are a possibility. I would think, I've noticed there've also been a lot of hedge funds that are short it. I think they're going to get their faces ripped off. I also think that one explanation that was given to me, and I think this might make some sense, is that, the halving just occurred not that far ago, a couple months ago, and the miners, their reward was cut in half. And some of them had Bitcoin on their balance sheets, and some of them probably aren't making much money right now or having cash flow issues. And so I think the miners are probably in a situation where the marginal ones are having to sell the coins they've got to keep the lights on. And they're just hoping that the price is going to go higher, but it hasn't yet. And, and we saw the hash rate dip a bit, not hugely, but somewhat. I would have thought it would have gone down more. And I'm guessing that there are probably some miners that are operating uneconomically right now that haven't quite thrown in the towel yet. They're leaving the machines on because they're thinking, well, it's going to come back up. And until we get kind of that capitulation, and they say, oh, fuck it, I'm throwing in the towel, I'm turning these machines off. Hash goes down a bit more, and then at that point in time, I mean, it can come out of the blue. I mean, we all know how this thing happens. I mean, the thing that's so wild about this asset is the way that it can really move and move fast. And that's why I say, like the hedge funds that are short this stuff, they're about to have a deeply religious experience. I mean, they don't understand. They don't understand that this shit can go up, 50, 100, 150% in months, and so, I mean, you're going to see those shorts are going to get covered so goddamn fast. And, and so I know Samson, I really like him a lot. He says $1 billion, within a year. I sure hope he's right. I don't think he is, but, I'm hard pressed to see how we're not at 100K by the end of calendar 2024. And I think this cycle takes us to 200 or 300K. And maybe at that point in time, we're a little overbought, and, we come back around, come back down a bit. But, it doesn't, I'm thinking so kind of multi-year that I really, the ups and downs of the months, and it's just like, in fact, I saw the 60, I thought to myself, maybe I have something else I could sell. I thought, maybe I should sell that and go grab this right now. I think if it goes to 50, I'm definitely doing that. I'm selling this other asset. So, because it's crazy cheap at these levels in my view.
And that wraps up our video for today. What do you think about Larry's bold Bitcoin price prediction? Hope you got some value from the video. Please share your comments and observations in the comments section below. Subscribe to our channel and give this video a thumbs up. Thanks for watching.